What is going on, people? Resilient Trading Group here, coming at you with another video. Today's video is a bit different. It is the difference between day trading and scalping, and telling you guys how to scalp and also how to day trade, the different techniques you need to be using, what not to be using, and how to actually understand what is best for yourself. So let's head into it now. So if you was to day trade, I'll start with day trading. If you was to day trade, you're mainly looking at the 4 hour, the 1 day and the 2 hour time frames. You use the 2 hour time frames to get your entry, you analyze on the 4 hour chart, and you analyze on the daily chart. Now you need to analyze on the daily chart because you're going to be holding this trade between 2 to 3 days. When day trading, it's not looking to take profit within the first day. So you need to be looking at the overall trend, understanding how price moves, because price moves different on all different currency pairs. But today we're sticking to the New Zealand dollar versus the Canadian dollar. Now, as you can see, usually the day movements are pretty small. They're not huge, but as of recently, since March, it's now the 7th of April. So for the last month, as you can see, it's been pretty drastic. These wicks are huge. These are about 100 pip wicks. So as we can see, it's in a downtrend, overall downtrend. But now it's came up and now it's coming back down. But as you can see, there isn't no real clear trend line. It's not like I can draw a trend line like that. That's pretty drastic, although it can be in there. You could say you could have a trend line. Yeah, this does work actually. This actually does work. Yeah, these are outliers. It tried to break the uptrend. Wow, I'm glad I've just spotted that out. Here was an outlier. It broke the downtrend, but very quickly got pushed back down. So that is good to see. Now we drop it down into 4 hour time frame. As I said yesterday in my wedge video, you should go check that out if you haven't. It's on how to identify wedges. This is a clear wedge here. It's been up, down, up, down. The movements are getting a lot smaller here compared to here, as you can see. And now it's coming back down to here. So when day trading, you need to be predicting what's happening for the next couple of days where price is going down. Now, in my eyes, I see this price actually going back down to the 0.80 level. It's currently at the 0.83 level, so that's about a 300 pip drop. So I'm actually predicting a sell, but I need to be wary of where my stop loss would be. So I need the best entry, and that's when I go into my 2 hour time frame. You always get your 2 hour time frames for your entry. So now you need to be looking at your support and resistance levels. You can see here we got a nice level of support just there. Then from the support we have our resistance. We have a bit here, then we also have a lot more on the tip of this downtrend. So what I'm looking for this pair to actually do, if I get these squiggly, right, that didn't take me too long, I've now found a squiggly line. What I'm actually looking for this pair to do is hit the support line here, go back up to test the trend line, which is pretty close to resistance, and then for it to have a nice big push. And my first take profit level would be this one here. So then what you also want to look at is if I can actually get any Fibonacci in. You need to be using your Fibonacci as much as possible if you can. So if I get the Fib tool, which is this one here, is my first one. I'll also be doing a video on how to correctly change the settings on your Fib so it looks somewhat like ours. But what you need to do is you need to go from the swing high all the way down to the swing low, which is this one here, and then draw it out. Now, the 61.8% is the key level, so if we quickly highlight that, that is this line of resistance here. That is your key level. And your take profit levels would be this level here. So this would be TP1 and that would be TP2, going in for a short. And we'd like entry on the break of the downtrend. So you'd actually enter once it's broke support and broke the downtrend, and it's rejected off the 38.2 or 50%, all of these levels. You'd want your entry to be somewhere around in the region of there. If I go full zoomed in for you guys, your entry would be somewhere in that region. And then your stop loss you'd probably want it at a 1-to-1 at this rate. You'd want it at 1-to-1. So your stop loss would be there, and then your second take profit would then be on the second line, so that would be on the minus 27%, and you draw that out a bit more because you're day trading, you're predicting a larger movement. So that's how you day trade. You would get your entry on the 2-hour time frame, like I just shown here. You would want to analyze on the 4-hour time frame. So this is using your, well, have you analyze, but using your support and resistance, your trend lines, wedges, Fibonacci on the 4-hour time frame, and then use the daily time frame to actually understand how the pair's moving. If it's in an uptrend the last couple of days, or has it been in a downtrend the last couple of days? And that is how you day trade essentially. You use these 3 time frames and you just pick apart the actual pair. But if you was to scalp New Zealand dollar CAD, if I scrap that, scalping you need to be in the 5, 15 and 30 minute. So I like to use the 30-minute time frame to actually do my analysis. So if we go ahead and analyze it in a 30-minute time frame, you can straight away see we've got a nice uptrend there. If I expand and zoom out, should see some clear levels of resistance. Now straight away I can automatically see this is a key level resistance right on this 84.3 line. So what I would like to do is for price to go ahead, reject off this trend line, go back up here. So what I would do is I would scalp this, I'd buy it here, back up to the trend line, and then what I'll do is I'll then take a short back down to the trend line to retest it, and you can get a nice risk to reward here. Nice 1-to-5 actually, 1-to-1, near enough. I'd analyze it on the smaller time frames. From the 30-minute, I'll go down into the 15-minute. And then straight away I can see that this is a line of support right here. So right now I would actually ignore that this is pretty steep. This is on the smaller time frames. Oh, it's actually breaking it right now. But what I would do if I was scalping this pair, I would take a long position here. Possibly for, yeah, I'd say 10 pips. Remember, scalping is anywhere between, I would say, 10 to 20 pips. And you analyze, what you do is you take a short here. You could probably watch this now and see if it hits take profit or stop loss. But scalping, remember, is only anywhere between 10 to 20 pips. And day trading, I would say, is between 40 to about 80 pips. Anywhere beyond 80 pips is swing trading. In my eyes, from 100 to 200, 300 pips are swing trading. But this is what I'll be doing if I was scalping. I'll go in the smaller time frames, look at support, look at resistance, look at the trend lines, and just trade it in between the trend lines. Very simple, very easy, nothing too complicated. I'll then break it down into the 5-minute time frame, and as you can see, we've instantly got a line of resistance here. If it breaks that resistance, turns back into support, I'd also rebuy it, and I'd only be rebuying it to test the trend line. But if I was to day trade it, this is the difference. Scalping, I'm only going for the 10 pips. If I was day trading, I'd wait for a break of the actual trend, and my trade would then go from being 10 pips to 30, and then a sell to, how many pips was that? I think, yeah, it was a bit more if I zoom out. I'd then take a sell and I'd select back down to the support, which would be about 40 pips. And on the previous trade, I had a sell-in for about 70 pips. So that's the difference between scalping and day trading. Scalping, you're using a 5-minute, and you're just using your support resistance. And your day trading, you need to be really looking at how the pair's been moving for the last couple of days, and using everything that you can, and also remembering to use my FX book to actually understand what's coming out in the economic calendar, which is going to affect the pair for a longer period of time. Obviously USD CAD will be here. We've actually had the IV Purchasing Managers Index come out below expected, so that'll be weaker for Canadian dollar. New Zealand dollar, not a lot coming out. There's a lot coming out for the US dollar though, Canadian dollar, apologies. Average hourly wages and also unemployment rate. And as you can see, that is going to be a negative impact from 30k to minus 350k. It's also good to know this just for yourself as well, guys. But yeah, that's the difference between day trading and scalping. I hope you all enjoyed it. Remember to subscribe, join our free Telegram chat, and I'll see you next video.